Century laminates and Century ply.
Welcome back. Well, we've got you the technical setup on the market. Now let's look at the F&O space as well and figure out what's the action there like. Manoj Murlidharan, Vice President Derivatives at Religare Broking, is with us. Manoj, good morning. What stocks or indices are you trading?
Good morning, Shurvi. Shurvi, Friday was an excellent day. We saw a good rally coming up, and the Bank Nifty tried to catch up, if not outperform. But what happens is after the Bhauk copy comes in, we find out that, there is no position which is going long, and it is just some short covering in the Nifty. Now, the difference here is there are just two trades when you actually buy an option or look for a follow-up buying. That is when you have a fresh long or a fresh short. So yesterday's trade, we believe that the fall which started in the last week of September as a weighted average price of somewhere close to 11,224. That's the average at which the short positions have rolled into the October series. And for the Bank Nifty, that is somewhere close to 21,600 to 650 odd. So a better strategy here would be to short the Nifty once you get levels of, let's say, 11,150 to 200. We keep 130 to 150, keep a stop loss of 11,200, and you'll get 120 more points in the downside. So somewhere close to 11,000 might be a good trade. So that 150 points of shorting is what we advocate. Same goes in the Bank Nifty. The levels would be around 21,200 to 300. Wait for that level. Take a short positions or buy at the money at least 21,100 put for this weekly expiry of 1st October. The stop loss should be 21,500 on the futures, and the support might be closer to 20,700, which is the target that we are expecting.
All right. Thank you very much, Manoj Murlidhar, for your Bank Nifty strategies as well. Have a great trading day and a week ahead. Well, we still have a couple of minutes for the markets to open. So let's look at another news that came in last week. Hester Biosciences has signed an agreement to receive indigenously developed technology to develop what is called a Brucella abortus S19 Delta. Okay, it's a vaccine to protect cattle infection. Rajiv Gandhi, Managing Director and CEO of Hester Biosciences, joins us. Please, when we say vaccine, we all tend to think of COVID. This is a veterinary product. It is an animal vaccine. So let me put that on the table first. Rajiv, good morning. Can you tell us what this means in terms of a P&L impact? How much of revenue can increase? How much can your EBITDA increase?
Yes, good morning. We have taken the technology to manufacture the Brucella abortus S19 Delta per vaccine. As mentioned in our press release, we are already producing a Brucella vaccine, but this is a modified vaccine which gives better protection as well as lifelong protection. Now, the government of India has embarked on a national immunization program against the Brucella abortus disease in cattle. So we are very hopeful and confident that with this vaccine, the government would probably want to use a better vaccine in their immunization program. The government has planned to acquire approximately 4 crore doses in the next 18 to 20 months. So that's the market that we are looking at. Till last year, we have sold not even 10% of this quantities in the earlier years.
Rajiv, but what does this mean to the P&L? In the first quarter, your revenue was down 10% to 40 crore. Your EBITDA was down almost 30% to 11 crore. Do these change in FY20, in FY21? Can you make it to some 200 crore revenues?
Yes, we are extremely confident that we should be able to touch a 200 crore revenue in this current financial year with this Brucella vaccine being added to our portfolio of vaccines, for sure, without a doubt.
Okay, by the way, the pre-open is indicating a lot of excitement. We don't know if this is exactly how it will play out because it seems a little too excessive, at least for now. A 1,300 up move, a 1,300 point up move on the Sensex.
Let's not read the rates now.
Yeah, Nifty 200 points higher, so we need to wait and see if this is because of 4%, 5% up move on Reliance. I mean, I think we'll just wait for it to settle. Just to complete the conversation with Rajiv. Rajiv, you said that revenue should at least go up to 200 crores in FY21. What about margins? Because they've been quite volatile. If I look at FY20 margins, then they moved down from 38% to 30%. Q1, they moved down further. So what should your shareholders expect on margins?
Definitely moved down last year, and we have given the justification in the press releases made throughout the year. Last year was an exceptionally bad year for us in terms of because the poultry market shrinking in the country due to high maize prices in the earlier part of the financial year. But having put all that behind and taking things further, we are very confident in restoring our margins back to what we had been doing before last year and probably improving them a little bit.
Okay, so can you just guide us on EPS or EBITDA or margins?
It would be inappropriate for me to give you specific financial guidance towards any of these.
Why? For the full year, can't you give us? I'm not asking you to reveal your second quarter numbers.
Would be better than what it was last year in terms of percentage.
All right. We'll leave it at that then. Thank you very much, Rajiv, for joining us. Okay, as Surabhi was saying, the markets are starting off on a sound note, about 1% higher. But we will refrain from reading too much till the markets settle down, and we'll take it from there. For the moment, we still have our experts with us. Deepan, I wanted to ask you, whether you will touch any of those exhibition stocks. We were discussing them with Prakash, Inox and PVR, with the first of the states starting cinemas.
Not really, and I think that if for some reason it does improve the sentiment in these stocks, then there's good opportunity to sell off. My only take over here is that once they start operating the cinemas, then some of the cost savings will go out of the window, because all the mall owners and some of the other landlords who have been waiving the rent will now start looking at getting the rentals back into, at least they may offer some discount, but the rental costs will start increasing for these companies. And with such low level of occupancy, it's going to be very difficult to cover the costs for a very, very long time. So I would be very underweight on all these companies which are dependent on crowds coming back into their establishments. So that includes even mall owners, includes retail shops, it includes exhibition companies. It's better to just stay away from this entire sector. I think there are many other exciting investment themes in this market. You could look at pharma, IT, beaten down banks are there. There is capital goods. I think the last amongst the sectors to start getting back to normal would be aviation, retail, theater companies, and to an extent, mall owners. So one should be very careful in that particular segment.
Okay. By the way, let's just look at the rate on ITC in pre-open. It's absolutely flat. Pre-open itself is now settled to about 120, 130 point up move on the Nifty. Now on ITC, Deepan, I wanted your view. This report that's come in that Maharashtra is going to ban the sale of loose cigarettes. It's coming and hitting the stock at a level of 170, 171. What are your thoughts?
I don't think it's going to make much of a difference. Overall, tobacco consumption is in a secular downtrend, and that's not going to change because of this particular move by the government. And unfortunately, although ITC has got a good FMCG business, it's not really contributing materially to the bottom line. And that's what has kept a lot of investors under stress as far as the stock is concerned.